Good morning, I'm Elton Robinson with your February 5th grain and oilseed update. We've dealt with low prices over the last decade, but typically there's always been one or two crops with attractive prices to turn to. Unfortunately, U.S. producers and allied industries are often victims of their own success, responding to higher prices with not only increased acres, but record or near record yields, thanks to ever-improving breeding and production techniques. It's not surprising that this often results in larger supplies and low prices, and that's essentially what we've been seeing across the board in all crops, along with high input prices, a vestige of the days when corn and soybeans were $8 and $16 per bushel, respectively. Let's look at some of the bearish news that's in the market these days. The strength of the dollar is hurting all exports because it takes more currency to pay for the same amount of goods than when the dollar was weaker. The United States and the rest of the world have large stocks-to-use ratios in corn, which means more exportable supplies for our competitors. Corn ending stocks in the United States are at 1.8 billion bushels, the most in a decade. World ending stocks are at a record 208 million metric tons. The big supply in the rest of the world could impede our ability to shed corn stocks domestically, thereby adding pressure to prices. The current export forecast for corn could be a bit lofty. Ethanol demand, after rising precipitously over the last decade, has finally leveled off. So what about trends? Grain analyst Richard Brock thinks we may not have reached a bottom in corn and soybeans, but when we do, it's likely to be a long and flat market. With rice consumption projected to exceed consumption for the third consecutive year, global ending stocks in 2015-16 are projected to decline. Decline as much as 14% from a year earlier to 89.7 million tons. These are the lowest global ending stocks since 2007-2008. Stock forecasts were raised this month for China, Indonesia, the Philippines, Thailand, and the United States. The stocks-to-use ratio is forecast at 18.5%, down from 21.6% from a year earlier, and the lowest since 2007-2008. Now to weekly exports reported for January 22nd through January 28th. Wheat exports of 230,000 metric tons were down 26% from the previous week, with South Korea, the Philippines, and Japan among customers. Corn exports of 661,000 metric tons were up 2% from the previous week, with Mexico, Colombia, South Korea, Japan, and Egypt as primary customers. Grain sorghum exports surged to 165,000 metric tons. That's up 65% from the previous week. China took 99% of the total, and Mexico the rest. Rice exports of right at 40,000 metric tons was down 7% from the previous week, with much of that going to Japan, Haiti, South Korea, and Canada. Soybean exports of 1.14 million metric tons were down 14% from the previous week, with China and Spain as big buyers. Soybean meal exports of 221,000 metric tons were up 74% from the previous week, with the Philippines and Mexico as the biggest buyers. Soy oil exports of 22,000 metric tons were up noticeably from the previous week, with Peru and Mexico as primary destinations. Beef exports of 12,000 metric tons was a marketing year high, up 6% from the previous week. Not to be outdone, pork exports of 18,400 metric tons was also a marketing year high and up 2% from the previous week. Well, that's it for this week's report. I'm Elton Robinson. See you next week.